Good morning and happy Friday. How is everybody doing today? I know, let's talk about it. Let's talk about GameStop. We're going to take a look at that option flow yesterday, which was wild because it went from insanely bullish to insanely bearish with just one thing, and that was the convertible notes. The convertible notes was announced on the press release, and I don't have to explain to everybody what happened in the chart yesterday. Yowzers. They see that volume. We're going to take a look at that stuff. Another thing we'll take a look at the insane spike in short volume that came with the higher volume yesterday. Note buyers are going to hedge that buying of those notes. The way they're going to hedge is by shorting the underlying. You've seen it happen with MicroStrategy. I posted about that on my X last night, just not to compare word for word, but essentially what MicroStrategy did and what GameStop's doing now is very similar. Where did they get the idea from? Because there's not a lot of players that are doing exactly what MicroStrategy is doing. So when I had posted about kind of let's go back in time to November 21st when MicroStrategy did a big convertible and then the price action and then the subsequent shorting. That's kind of what I was getting at. So definitely encourage everyone to go back and maybe read that post. It might make a little bit more sense in text format there. As opposed to me reading or just reading it word for word. So it's something I wanted to kind of compare there. There was some talk yesterday. They might have started doing the pricing as that volume really started accelerating into the afternoon session yesterday. So really go over to the 15-minute here. We'll take a look as that volume started pouring in. You can see it really started upticking there towards the afternoon. I had a lot of hunch that possible pricing was occurring then with those notes. As we saw that, like I said, they were shorting the stock. Short volume, just went through the roof. But the volume itself for the day, I believe, was around like 96 million shares. But essentially, this press release regarding the Bitcoin, other investors, particularly those that wanted to sell the stock short, they definitely hammered on it. So we kind of look here the last few days. You're looking over here, short volume, 418,000. We're looking right here in the left corner. Kind of uptick there. We came into earnings 9 million with the higher volume that day. Following earnings on the 26th, 53 million shares traded for the day, and then yesterday 96 million, almost 97. But that short volume went from 9.2 million and then to 30.885 yesterday. So pretty incredible in that regard, and that the shorts definitely jumped in back into the arena. And they could have been shorting, buying back at the end of the day. You don't really know until like short interest gets updated, but again, that's just every couple of weeks. And that's kind of lagged data in that regard, as positions change daily. They could be in and out of a position. So I had posted yesterday morning as that flow was just becoming, it went from increasingly, like I said, bullish to bearish, and we're going to talk about that. By yesterday morning, we saw, the net call premium just falling apart straight out of the open yesterday. Net put premium was just skyrocketing. So basically, how this played out, those that sold covered calls, they got paid. Those that sold puts, they might have been buying shares at these prices, or could be, but that might have been what they wanted. Just may not have been the best price. Put buyers, they definitely got paid, and call buyers got smoked with the volatility. Now, I know a lot of people are saying, well, hey, the price was still going down yesterday, and the options were staying the same. That's because the IV was spiking because of the price action. So that higher implied volatility was keeping the option premium up. So when we take a look at yesterday, in fact, we're going to zoom out a little bit. Everybody was very excited with GameStop Tuesday into earnings, but there was not a lot of option activity. Then Wednesday, market open, GameStop surged, then the net call premium just started flying and got to a high of almost 14 mil. And that was on Wednesday. And then with the momentum Wednesday, there were a lot of folks. My thought was there might be an offering just in regards to shares, just to add some cash while the stock was at the top. But once they announced the Bitcoin policy, it kind of made sense they would probably act pretty quickly in regards to that. And boom, came up with the notes offering for the 1.3 billion. The news, sat semi well, that day, Wednesday night. Stock dropped to 25, but by yesterday's open, that's when things really started accelerating, when Wall Street opened and the options market opened and the shorts started jumping into the stock. So if we look yesterday, we're going to pull up that one day. You can see here, right? I mean, just straight out of the open, that call premium just dropped. There's 5 mil almost right there. Now by within the first half hour of the open, that call premium had dropped -8 mil. So the people that with calls, they were exiting their position, repositioning, leaving very quickly, and then net put premium just started moving. I mean, within like the first hour of the day, it was nearing 3 mil, and it just kept accelerating into the end of the day. At one point, reaching almost 8 mil net put premium there. And then you can see net call premium just continued to decline with the stock as the stock moved down to the low yesterday around what 21.16, at one point down 25%. Net call premium just faded. So if we look the full day, net premium was -30 mil. Not something you want to see. That's extremely bearish. And the flow, like I said, had literally within just a couple of days, 2 days, transformed from, I had posted yesterday, insanely bullish to insanely bearish. It just happened that quickly, and that's exactly what can happen, especially with volatility. So it was kind of wild to see, a pretty large day. Total premium yesterday, 160 million. So if we kind of look historically, you can see that premium on Wednesday pretty large also, 109, 160 mil yesterday. So a lot of what came in as bullish on Wednesday left immediately on Thursday morning. They couldn't close their calls fast enough, as volatility was definitely skewing the pricing. As you can see, compare like, GameStop normally has 7 mil total option premium, 10 mil in a day, 12. So 159 was pretty strong yesterday. And you can see that volatility had slowed down up into earnings, got up to see 74%, and then yesterday it spiked to 95%. So that's why you saw a lot of those options getting skewed in that regard for the pricing. I did see a lot of posts about that. Just know one word: volatility. And then total open interest, 1.05 mil total across the board on the contract. So quite a lot of volume as well. Yesterday, 1.2 mil total volume. Split between calls and puts, and we're going to take a look at that right now. I don't want to try to take up too much of your time as I took the video right into the open yesterday, and I do apologize for that. But we're on a streak 5 days in a row. How about that? All because one person likes the post every day, and that's just enough to post a new video. So if we look yesterday, here was your highest volume. We're going to look at this volume. Here were your highest contracts. And like I said, I was posting about the puts. They were coming in. The calls were being sold, and the puts were coming in. We had the 25s for this week. Let's look at the 1 day on that. Take a look at actually what was transpiring on there. About 1.5 total premium yesterday. And we did see an alert come in for volume over open interest on unusual whales. They were selling. They were selling these calls around 63, and they ended up closing around 15. So not a bad move if you were selling those calls there. You saw the premium come in on Wednesday and the premium leave yesterday. So you can see 46,000 volume, about 15,000 in new open interest. More than likely, bought to open, or those that sold to open that didn't think the stock would go above 25 after the drop yesterday. It's, those expired today. So we'll see how this plays out. GameStop at the time of me filming is about 25 minutes before the open is 21.41. Oh, there we go, 21.42. So if we look at the other activity, the $22 puts for this week, they went to the moon. Those were alerted yesterday on unusual whales as the volume then exceeded open interest. And they were filling around $13 and ran all the way to 150, nearly 1,000% run. So you saw about 2.2 mil total premium. I tried to put the word out early that it was looking pretty bearish in the option flow. So I think a lot of you were able to read between the lines in that regard and adjust your positions or capture your gains or change your bias or flip your play, because there was this situation changed very quickly yesterday with GameStop. We saw about 34,000 volume on those $22 puts that expired today. 8,000 appear in new open interest. So you got some put buyers here, sold. I'm not sure what they did there at the end, but even at the end of the day, they closed at 75. And they were loading them in the morning as the price really started moving down, $6, $7, $10 a piece. So those did move. Like I said, about 2.2 million total premium. $5 puts for December. That's kind of wild too. About 1.3 mil premium. Sellers and buyers as well. And I mean, they're trying to collect premium, I guess. Sell a $5 put if you don't think it'll go below 5 by then. you'll be good in that regard. And the premium was $35 a contract, so not bad in that regard. 1.3 mil is a new chain, new option added. So you usually see that when something new is added, it immediately gets flooded. And the same with these $20 puts for this week. Yesterday, they got alerted on unusual whales. What time were we seeing that alert? Before noon, so shortly before noon Central Chicago time, they were filling for $11 and ran to 50. So there was some movement there. The implied volatility was 173%. So it looks like the IV today 322%. But some of that did appear in new open interest. So we'll take a look at that as well. But yeah, I mean, like the $30 calls, I mean, boom, they were gone. Selling, and they were out of there. The 30s for this week got faded. So they were, let's look, if we go out like 3 days, you can see where they loaded ahead of earnings at 30. Some got out and captured some profit at 90, so about 200%. And then got faded down to around $5 yesterday. So you got to be careful with these short dated and volatility. You got to capture those gains. I talk about it, been talking about it for a year with this particular stock, with this particular name, especially when we're looking at option flow. Even like the $22 calls that expired today, people started buying, towards, they thought maybe buying the dip. Let's see, we had volume over open interest right after lunch, filling around 96, but they closed around 75. So not much there, and they were kind of at the money calls. So the implied volatility 174% short dated. You have to be very careful. You're going to get cooked in that situation as a buyer. Now, as a call seller, that's okay. Selling high IV generally works out better than buying high IV. So covered call sellers, again, they won. Not won per se, but they definitely made some points in that regard. And those $55 calls, I think that was new on the chain as well. They added that yesterday. So you're going to see a flood of activity. Pretty much all of it carried over into open interest. Very interesting, though. So it could have been sold, but just showing ask because it got a good fill because there was nothing else out there. Let's see, low 1 and 4. I mean, either way, if it went to 55 today, those would be in the money. More than likely, it's 160% out of the money. So those will expire worthless. But if those were actually sold, but still showing that, basically what would happen sometimes, for example, like I've sold calls before and got a good fill, so it'll show up on whales as like, it'll appear like an ask, like I bought it because it was filled closer to the ask price. The reality was it was sold to open. So you can see that sometimes as contracts change hands, you can get a good fill. Like $24 puts exactly yesterday, they rallied. Those got alerted right after the open and filling at $25. They ran up to $300. That's not a bad move for a one day trade. I know a lot of people like, hey, let's be bullish. I like calls when it moves, but there's also the downside of the stock, which is an opportunity. And I try to, as much as people might say, oh, I don't, I only like when the stock goes up, or I only look for it to, move to the upside. Well, there's still people that short the stock. There's still people that sell calls. There's still people that sell puts. So I got to provide you with the full opportunity, the full spectrum here. And that the opportunity, for example, when you start seeing the stock move down, the negative reaction to the stock, and then you get alerted that they're slamming short-dated puts, that's something to look out for. Like I said, those were $26 and ran to 300. I know a lot of you, depending on your option trade, would have much rather been in this, for example, $24 put, buying them at $30 and selling them at 300 and making a great little gain, as opposed to maybe getting kind of rugged on some of the calls because of the high IV. So yeah, that's one of those scenarios where put buyers got paid, just like I was talking about at the beginning of the video. So if we take a look yesterday in terms of where was that money, where was the bulk of that option money, where was the bulk of that premium being spent? Let's take a look at that. I can answer that for you. We can use unusual whales and we can drill into that. That's what I love about whales. Not only I partner with them and they're my great friends, but I use the service. I am a subscriber. I have a subscription, so I use it. A lot of times flow, you'll hear people say it's just noise. Every once in a while, you'll be able to kind of dissect it and drill down. You can follow trades. Sometimes you can get lucky and find a really bullish directional trade, and then boom, you've seen the move. You've seen the post from Unusual Whales where we'll highlight, hey, look at this random activity in a stock, and then boom, here comes the news, and somebody new. It happens all the time. Every once in a while, you get lucky. I set a lot of custom flow alerts to catch different things, and I mean, like I said, it's a lot of it's just hedging. A lot of big banks, institutions, anybody trading large, will hedge traditionally with options, up or down, just to protect the underlying, depending on whatever their thesis is. They're shorting a stock, they're longing a stock. They're going to hedge using the derivatives market, especially large institutions. A lot of retail investors hedge. I hedge using options against shares as well all the time. So it's important, and that's what it exists for. So you look at some of that total premium there. $10 calls was the highest for January. 75 puts. That might have been a strategy there. Let's see. Let's take a look at that. 75 puts for January. 1,100 volume, about 6 million in premium yesterday, but only 367 new open interest. Well, that's interesting. So that's 75. It's kind of deep in the money put there. Let's say you bought a 75 put, gives you the right to sell shares at 75, or you can sell a $75 put. Get assigned. Take the option difference in the premium, because those are expensive contracts. So you can see the price there. Exactly, $53 a contract. So yeah, that's just more institutional repositioning. $10. The $10 calls for January. Let's see what they were doing there. 5,000 volume yesterday. 5,500 new open interest. 7,000 premium. Appear mostly at the bid. They might be shorting calls. Take advantage of the high IV. We'll see. They sure did sell quite a few of those yesterday running through. Always like to see that. Selling some, also too, it's really good. Selling a kind of deep in the money call like that. I've done that before. Really, the bottom line there provides really good downside protection. So if you lose your shares, say you got assigned at 10, you lost your shares at $10 a share. You had that plus your premium already collected, which was $12.75. So that's still $22.75. So not bad. You got a little bit of a premium there, considering that's a little bit higher than the stock was trading, which is $21.36. So yeah, a lot of these, I don't know if you know, we'll go through another video another time about, how do the numbers add up? How do you do it so quickly? With the strike and the contract and in the money. It's a $10 call, so it's in the money. Stock's $21.37, so it should be about $1,137 contract. The reality is it was filling a little bit higher due to the volatility. So they're taking advantage of that higher premium that it's paying. That's how that works. So you can see, I'll let you look at it. You can take a screenshot here. These were your highest premiums total sorted. So here were your strikes and your expiry. And you can take a look at that, like the volume in comparison to the open interest. So yeah, pause here if you like. Take a screenshot. That's entirely up to you. But like I said, it was pretty bearish in that regard. It flipped very quickly. So we look at open interest here. Let's see our largest changes today to open interest this morning, ahead of the open here. So we can get you the most accurate, up-to-date information here. So your largest changes were the $5 puts for December, the 55 calls, largest change, the $5 puts for January, 25 calls this week, 27s for April 4th, saw a little bit of an increase there in OI. It was 1,500 before, now 1,100. It might have been selling those. Let's take a look. The bid looked pretty high yesterday. Considerable, yeah, they were definitely selling those calls yesterday. See, 11,000 volume yesterday, 9,500 pure new open interest. The bid, 10,000 roughly. So a lot of that could have been sold to open. Didn't think GameStop would close above 27 by April 4th, so they took advantage of the premium. Looked like they banged it twice. Maybe 4,000 here, and then sold it again and grabbed some more. So that was about 580 grand in option premium. So for example, if you sold those, how that would work. If you sold those $27 calls and GameStop didn't close above 27 April 4th, basically the contract would expire worthless. The premium you already received, so you wouldn't have to do anything to navigate the position in that regard. It would just be your free 580 grand. So if you're an existing stockholder and you sold those calls against that position, and the stock didn't go above $27, you made 580 grand. depending on who that was. So just remember, you have to always consider who's providing liquidity to these options, who's selling you these options. Roaring Kitty's got a large position. He could be selling options. Cohen's got a large position. He could be selling options. Institutions have larger positions. They're selling options as well as market makers, option dealers. So just remember, other retail traders are the ones also providing liquidity in regards to option contracts, both buyers and sellers. So always keep that in mind. But yeah, those were your largest changes in that regard. Those puts too, the 22, see the puts, open interest carried over. So those 24 puts, I know we just talked about that already, but I did increase on those as well from that volume. I mean, there wasn't a lot. 21,000 volume and 6,500 ish roughly. So some of those might be holding them open today to take the rest of their money and see how it went. Because the stock, as of now, and see about 10 minutes before the open, it's trading at 21.35. So those are still profitable contracts in that regard, with today being the expiry as well. So it's not exactly what I know the bulls wanted to see in that regard on GameStop. Like I said, that short volume booms. So we'll take a look what happens today when the market opens. We'll take a look at those options to see what they do with the options today, based on yesterday's activity and everything that I just showed you. So we'll take a look at it. It was a pretty big hit yesterday. And then, the level down there, let's see, 2116 low. Seen it not too long ago on March 13th, 2156. So if we're going to back out some time here, we lost all of the moving averages at that current price. So we turn on the extended hour trading data so we can see where we're trading at right now. And the video 2164. So right around that March 13th level before this recent kind of run up. So, the stock's in a familiar spot in that regard. They just offered notes for 1.3 billion. They might make a little bit more than that. 1.28, I think it was. Let's see. We'll go back over to the pricing from last night. Yeah, the net proceeds will be approximately 1.28 billion or 1.48 if the initial purchaser exercises the option, which was to buy 200 more million. So the sale of the notes expected to close April 1st, and the way that worked was the conversion rate for the notes was 33.497 shares of stock per 1,000 invested, or per 1,000 of the notes. So, which basically was initial conversion price of 29.85. And I shared this about, where did they get the math? The 37.5%, what that means is that this 29.85 price is 37.5% higher than what the VWAP was during yesterday's trading, Thursday, from 1 o'clock to 4 o'clock. So basically, the last 3 hours of the trading day on GameStop yesterday, we'll use the 15-minute chart to illustrate that for you. So the last 3 hours here, they use this as the VWAP for the pricing. And that is why it says at $29.85 is a 37.5% premium, basically. So for those that were kind of unsure what that meant, because I saw a lot of misinformation on that. So I hope that makes sense. If not, reply to this post, and I'll help explain it a little bit more. So that's where that came from. Let's see. GameStop may not redeem the notes prior to April 6, 2028. And GameStop may redeem for cash all or any portion of the notes at its option on or after April of 2028 if the last reported sale price of the stock has been at least 130% of the conversion price for the notes, then in effect for for at least 20 trading days. So note holders have the right to require GameStop to repurchase on April 3rd, 2028 at a repurchase price equal to 100% of the principal amount. So if you go back and read, like I said, what I shared regarding the MicroStrategy, their verbiage in the GameStop note offering is very similar. So go take a look at it. It might make it easier for you to understand. Not that you don't understand. It just adds a little bit better context for you. And for me personally, I like to read. I read a lot. I absorb a lot of data. I know I share a lot of data too. But that's how I do my best retention. I like to read, share, then go back, and sometimes by sharing and then reposting or just reading information again actually helps me learn it even more when I'm just sharing it with somebody else. So that's what I got for you today. We'll take a look at the option flow as the day progresses. We are, in an expiry today of the March 28th expiry and quarter one ending in that regard. Not quarter one for GameStop, but quarter one in terms of like the year. So this would be the Q1 end trading close because Tuesday's April 1st. So, well, pardon me, 31st is Monday, so that'd be the actual close. But this is the last Friday, like option expiry is what I meant of the Q1. So, yeah, we'll have to see how it goes. Like I said, it's, when you see that the net flow change like that, you see a lot of people really love GameStop when it's bullish and emotions run high, both bullish and bearish on the stock. I know when GameStop becomes bearish, or you see a 25% drawdown in one day, it definitely it shifts the sentiment. But depending on your situation, that may not have impacted you yesterday. That might have been an opportunity yesterday for you. So it just depends on your particular situation. But that is what I have for you. You are a legend if you made it all the way through another long-winded video. They're never going to be any shorter. I have a lot to say, and it's not easy to talk about in a condensed period of time. I'm not going to rush you through it like a micro machine. But if you did watch it all the way through, why don't you just reply to this post? Happy Friday. And if you could, smile at somebody today. Maybe hold a door for a stranger. Call a friend or a family member you haven't talked to in a while. Do something for yourself. Do something for your family. Do something for your significant other. Do something nice for your children today. Maybe do something fun that you haven't thought of or that you've been thinking of and you just hadn't had the time. Make the time. No better time than the present. So with that, I hope you all have a wonderful day, and we'll just see you lurking around the internet very soon. Y'all have a great day, and happy trading. Great weekend. And if this post gets one like, we'll go ahead and drop another video on Monday. Y'all have a fabulous day.